Well, this has been a constant focus for those of us involved in the business of FX, and we're continually adapting the tools we use and the way in which we approach measuring costs. However, for the wider industry, where this may have previously been a secondary concern, it's upcoming regulatory change that is driving an increasing need for transparency at all stages of the investment process. Specifically for us, as we look towards the implementation of MiFID II, currently slated for the beginning of 2018, we see that Article 27 is driving this particular topic. In essence, investment firms operating under the MiFID II framework have the obligation to take all sufficient steps to execute orders on the most favourable terms to the client. Thus, in order to have transparency, we have an increased focus on presenting the transaction costs associated with order execution in a fair and accessible way. This is where things start to become a little more complicated. The majority of FX is traded on an over-the-counter or OTC basis. Now, with most investors, they're familiar with trading on an exchange basis. Prices or quotes are communicated to everyone who has access to the exchange, and the price at which a transaction is executed is also communicated to everyone. With access to a central price, it's easy to understand the markup or commission you pay when you trade, for example, an equity. It's the difference between the final price and the quoted price. When trading on an OTC basis, however, prices and quotes are provided to customers privately. There's no exchange to centralize this, and this means that different customers may also receive different quotes from the same vendor. Generally, market participants do provide the indicative levels at which they're willing to trade, and if we look at an FX spot price on Bloomberg or Reuters, this will usually be a composite rate derived from many different underlying pricing sources. It works like a centralized pricing source, but with the key difference that it's an indicative price rather than a binding one. So the business of defining transaction costs begins with attempting to robustly establish the aggregated average price of the entire market, and then looking at this relative to the price which you've paid. Greater levels of market access, along with the search for yield and an appreciation for the benefits of diversification, has meant that investors now typically have a significant exposure to foreign-denominated assets. Generally, an FX transaction will occur in order to purchase a foreign asset, and whilst investors may have an appreciation for how much this costs on the underlying asset level, the rate at which the FX transaction occurs may be a secondary consideration or a hidden cost. Additionally, holding foreign-denominated assets implies an intrinsic exposure to FX risk. Managing or hedging these risks also requires transactions in FX. In short, FX transactions costs will usually apply to the majority of the foreign assets held in your portfolio, and they can build up without being noticed. When an intrinsic part of a process functions smoothly beneath the surface, it often goes unnoticed until there's an issue, which is when it becomes apparent how key these underlying building blocks can be. A focus on making sure your FX transaction costs are minimized can have a meaningful impact on the overall returns of a portfolio, especially when compounded over time. Although we've touched upon the complexity of determining a relative benchmark against which costs can be compared, and we've touched upon how big intrinsic exposures to FX costs can be, it's worth noting that due to the size and liquidity of the FX market, transaction costs are generally comparatively low or hidden relative to other markets. Therein, however, lies a problem. If a cost is already perceived as low, it may be seen as a secondary component, and there may be less of a consideration as to whether this cost is actually fair. When it comes to assessing whether the costs you pay are fair, the first step is to source your definition of what constitutes a fair price. Without a working knowledge of this, you may well already be paying too much. This can be assessed in-house, through using a third-party provider of transaction cost analysis, or by engaging a currency specialist who employs a combination of external third-party and internal measurement processes to provide a comprehensive costs breakdown. Ideally, you will want to have a high level of transparency and regular reporting regarding how your FX transactions are executed and the costs incurred. As an independent specialist currency manager, best execution on behalf of our clients is one of our primary goals, and there are no incentives for us to accept anything less. We work with our clients to identify their tolerances around execution, and multiple execution strategies is the key to delivering flexible solutions. An execution desk staffed by experienced traders with access to multiple pricing sources and a variety of trading tools is fundamental for us when it comes to minimizing transaction costs. Additionally, the large volumes that we transact in give us access to economies of scale, which further enhances the pricing levels we receive. We monitor these prices and the performance of our trading counterparties so that we can understand who in the market is able to offer the best liquidity and the best prices. As you can imagine, this requires a detailed level of monitoring and record keeping. Aggregating this process in terms of transaction cost analysis for our clients allows us to provide and prove the efficiency of our execution levels, as well as being transparent about when and where we trade. Additionally, we make this information available to an independent third-party transaction cost analysis vendor so that we can provide external analysis to our clients and further ensure we are getting the lowest cost possible. In addition to the talk we've done here with the PLSA, if this is something you'd like to know more about, please get in touch with myself or the team at Mesiro Financial Currency Management. You can find our contact details on our website, www.mesirofinancial.com.